The stock market is quietly higher here today, and it's almost
too quiet.
The S&P 500 is still confidently above its previous resistance high here, but it was really the Dow Jones that actually seems to be making the most impressive move today. And this may have been because of some interesting news we had about Warren Buffett. News surfaced yesterday that he bought a big stake in United Health Group, which is of course a big stock in the Dow Jones that has been beaten down for months. And this morning we got retail sales numbers, which came in slightly lower than expected. We were forecasting a 0.6% month over month gain. We only saw 0.5%. However, the good news is that they actually did a revision to the previous reported number and changed it from a 0.6% month over month gain. They revised that to 0.9% growth. So overall, a relatively just slightly upbeat retail sales number. Here's a look at the daily chart of the US dollar index, which I know is central to a lot of trading ideas that we do here on the channel. We can see the dollar index continuing to push lower. After that big flop on NFP that we saw, then also the CPI report coming in a little bit soft, and the producer price index number did get the price to jump a little bit for the dollar, but still not enough, it seems, to break this perpetual downtrend that we've seen the dollar index in for most of 2025. Volatility index is also down to 14.58 today, which is a signal as to why the market is so quiet. But one thing I would encourage you not to do is to get complacent in this type of market. Don't get impatient. If you're somebody who trades gold and it doesn't feel like it's moving very much, that's because it's not moving very much. But don't let that make you make some silly, impatient mistakes. At some point, volatility will expand and things like gold and the S&P 500 and the NASDAQ will move a lot more. In fact, this is where a lot of people make a lot of mistakes, where they get really bullish because they get frustrated, they throw in the towel and they say the stock market goes up every day, I'm just gonna buy it. And just when that happens, you get a very sharp wake-up call as volatility expands and the stock market pulls back. This is also relevant in currency trading because right now you see volatility really quiet as well. You have the euro dollar trading in a tight range, and just when people least expect it, that's typically where you get a sharp rise in volatility, which could cause this thing to move in much more drastic fashions. And as traders, that's something we kind of want. I don't know about you guys, but I actually like a little bit of volatility in the markets because when things are trading just sideways to very little, trading costs rack up without much movement. There's no gains to be had anyways. However, there is a little bit of move happening in oil, which is actually a bearish setup for me on the Edge Finder. I'm looking for a reversal back towards this 66 level as an opportunity to potentially get short. That is on my radar. Just not finding a ton of trades right now. And I think it's actually okay not to be placing trades. A lot of times as traders, we feel like, oh, we need to be, buying and selling and buying and selling. Whereas sometimes when the markets are quiet, there's not a lot you need to do at all. You can see oil is getting a bearish rating here on the Edge Finder, a -8 score, and especially getting some weak reads when looking at the economic data. Now with the retail sales data come in a little bit soft today, also going to suggest just slightly more bearishness for the economy, which is bearish for oil as well, right? The oil market wants to see strong, raging economies demanding lots of oil. That's for bullishness for oil. Bearishness would be the opposite. We also have a clear downward trend reflected in the -3 technical read, and sentiment is mostly mixed with slightly a bullish read. Gold and silver still topping the list as possible setups, but let's take a look at them. Back to gold for just a second. It's actually hard for me to think of a time that has been worse for gold trading in the last few years. It's just so choppy. This is the ugliest chart I've seen on gold in a long time, and I've seen a lot of people commenting the same thing across social media. A lot of people who love to trade gold may feel a little bit frustrated with this type of environment. Again, best thing I can tell you is it's a summer month. It's a little bit quiet out there. Well, very quiet out there. Volatility is very low. Sit back, be patient. Something will happen at some point, but for now, just stay patient. Here's a look at silver prices. Silver actually moving a little bit cleaner than gold. If I was to trade metals, it would probably be more likely in silver. You have a little bit of support here, which may be an opportunity, but I really like this level a whole lot more, around the 36.5 level. So I may take a small long around these areas just to possibly capture that expansion volatility, which could lead to a spike in metal prices. Could be interesting, but I like this setup a lot more, around 36.5. And this morning we heard from the Fed Fed's Goolsby, which is a Fed official, if we get a hint for September or later in the fall that we are not in an inflation spiral, we can cut rates. Here's a look at the 10-year Treasury yield, and what we can see is it is still trending overall lower, which is suggesting that, okay, the bond market thinks rate cuts may be on their way, although it's not a screaming obvious, we're going to get a bunch of rate cuts dynamic, like perhaps we may have seen prior to them cutting last year when they cut, towards September. But interestingly, actually, when they did cut rates in September, the market actually, the bond yield started to rise dramatically after that, suggesting that the bond market then thought, the Fed's going to pause, and it was correct. In fact, in recent years, the bond market has been pretty dang correct about what the Fed is going to do before they do it. So right now, the bond market is suggesting there is a slight preference towards more rate cuts this year. And so we'll see if that is the correct basis. The way I'm reading this, by the way, this is the US 10-year yield. I have a video on this topic if you want to check it out. I'll leave it linked in the top right. Today's video is sponsored by Black Bull Markets. Black Bull is a New Zealand FMA-regulated broker offering Forex, metals, and crypto trading to their users. With access to over 26,000 tradable instruments, everything from gold, commodities, indices, and more, through their CFD platform, you can trade pretty much anything. They're also backed by one of New Zealand's largest investment management firms and provide institutional-grade trading conditions. Black Bull Markets has also earned multiple industry awards for their fast execution speed and their leverage trading opportunities on their platforms. Traders can access up to 1 to 500 leverage and choose from several platforms like MT4, MT5, CTrader, and TradingView. And something super cool is that they offer no commission on crypto trading, as well as highly competitive spreads, especially on Ethereum. And for a limited time, active traders can receive free TradingView Premium and up to $60 reimbursed every month just for trading with Black Bull. And if you're interested in copy trading, they have an expansive platform just for that. You can see real trading results from other traders in a live environment through their copy trading platform. And when it comes to choosing a great brokerage, choosing one with competitive trading costs in the form of spreads and commissions is very, very important. With their ECN Prime option, you can see spreads from 0.1 pips, which is pretty crazy. And of course, if you're a larger trader, this institutional package looks incredibly competitive, with spreads from 0 pips as well as a $4 round turn commission. Of course, there is a minimum deposit on this, but all three of these look highly competitive compared to the industry. Make sure to use the link in the description down below. We'll leave all the information you need to start trading with Black Bull and start taking your trading to the next level with their amazing platform, their competitive spreads, as well as their copy trading platform if that's something that you're interested in as well. So like I said, make sure to use the link in the description down below to support my channel and also to check out Black Bull to see if it's the right fit for you. Now back to the video. We also heard from Trump this morning in regard to tariffs. We saw chip referring to not potato chips, but rather semiconductors, right? All the tech stuff that powers all this AI revolution, a really important technology to global markets. Trump says chip tariffs could come next week, which definitely raises a little bit of concern. If you get any sort of change in the way trade dynamics are working, it could seriously impact the NASDAQ, which is heavily built around this, NVIDIAs of the world, AMD, all these companies that are building these semiconductors. However, one thing that's interesting is that we have seen a rise in the White House making interesting one-off deals with companies like NVIDIA, essentially letting them trade with China in exchange for the White House getting their hand in the pot. It's kind of an interesting thing. My opinion is a little bit weird, but anyways, we'll see what happens next with that. But there are some deals happening, and companies like Apple and NVIDIA, these powerhouse companies, are seeing this opportunity to make a deal with the White House. The White House is like playing the toll booth in the middle of global trade, clearly this year. And so, you have some interesting dynamics to see what happens next with this chip trade. But the market mostly thinks, if we take a look at, for example, NVIDIA stock has been ripping higher here because, again, it seems like NVIDIA is going to have the opportunity to sell chips to China. That bodes well for indices. It is a strong, powerhouse is the NASDAQ, of course, but it's built on the AI trade, which is NVIDIA, Apple, Microsoft, all these big mega tech companies that are building out their AI infrastructure and selling it internationally. It's a really important component to stock market growth for earnings, etc. Taking a look at the UK economic heat map, we actually see the British pound getting a stronger reading here today. I thought this was kind of interesting. We had GDP growth this week that came in better than expected. An unemployment rate remained unchanged compared to forecasted. And we also know that the UK is dealing with a situation with inflation, right? They had inflation actually rise to 3.6%, which makes it difficult for the Bank of England to easily cut interest rates. And with a better than expected GDP statistic, I think the British pound may actually be a good buying the dip opportunity, especially against the dollar. If you were to get a pullback into this like 1.3425 area, looking for a pullback and then maybe a continuation up into the previous highs around 1.3750. This is currently a top setup within the edge finder. You can see pound dollar getting some bullishness, especially on the economic data as we just discussed. What's cool about the edge finder is it automates a lot of fundamental analysis. A lot of traders want to use fundamental analysis, but they don't have time to read 74 different articles per day. The edge finder swoops in and saves the day because essentially it automates the process of pulling in all the data, scanning it, understanding it, and essentially generating a bullish or bearish reading based on the data that it finds. If you don't have a copy of the edge finder and would like to try it, we'll leave a link in the description down below to where you can sign up for a trial for 30 days access to the tool. Within the edge finder, you can scan our top setups indicator, which again looks at sentiment, technical, and economic data to help build better biases in the markets. You can track institutional money positioning, crowd sentiment, and our economic heat maps, which make fundamental analysis more approachable to people who want to implement it, but don't have 48 hours a day to learn about it. The edge finder has been something we've been working on for the last few years, so I'd encourage you to try it out. Take advantage of the 30-day trial down below in the description. And today I discussed with Johnny Hart from the Market Insights podcast about what's happening in markets today. If you like podcasts or you want to listen to fundamental analysis, we post a couple episodes per week and then we go in detail on economic data and much, much more. So if you like podcasts, check out this clip and consider listening to the full podcast with the link found in the description down below. Yeah, so yesterday we had some interesting data that came out of the US, and then this morning, of course, we had retail sales data, which came in just a little bit lower than expected. However, they also revised the previous month's numbers higher. So it was a bit of a mixed retail sales number, but I think the market has just very high expectations right now. The stock market is just a little bit lower here today, not by a lot, but volatility is so low this week. There's just not been a lot of movement in either direction. So we do have the stock market just modestly lower here off of just a mixed retail sales number. I think that shows in terms of the market's expectations, they're very high right now. People are very much kind of demanding perfection. And I think that's typically the mode that you get into when stock markets are hitting all-time highs. I also wanted to reflect on the US dollar in response to this. We do see a lower dollar here today. So a little bit of softness in the retail sales numbers being reflected here in the dollar index, which is back down towards the bottom end of the range here. Just to compare that across the currency market a little bit, we have the euro up 0.5% up to 1.1714 today. The pound dollar is also up to 1.3570 at the highs of the day. So a little bit of a bounce back here for the British pound. The dollar yen is lower, down to 146.84. And mostly this week, I guess, would actually be summarized as a bit of softness for the US dollar. We did see the consumer price index this week didn't cause a huge move in markets, but was a little bit soft. The producer price index number, however, which we haven't talked about yet on the podcast, did actually come in very high. The month over month reading was 0.9%, which was a sharp move higher than expected. And so that caused a little bit of uncertainty. The dollar actually moved higher yesterday, but giving back those gains here with the retail sales number that printed this morning. So overall, this week's economic data for the U.S. Seems to lean, at least in the eyes of the market, a little bit lower, with rate cuts still largely being expected in the upcoming September meeting. However, there becomes a debate here with all of this. You know, you're seeing some inflation data that looks a little bit cool, some that looks very hot, like the producer price index number. And you also see some jobs data that seems to be materially weakening. This week, yesterday, we did also get the unemployment claims. They came in just a little bit better than expected, meaning lower than expected, right? Less people filing for unemployment, but not by a huge margin. And so we do see a little bit of softness in the labor statistics. And to go with that, we had a little bit of softness in inflation, at least on the headline level. This week was, again, very mixed because you also had core CPI that was a little bit stronger than expected. But I think that the posture of the Federal Reserve, or at least what the bond market thinks, and why I think the dollar is lower this week, is you have in front of us the probabilities of a rate cut still on the table, even with a little bit of a spike in PPI, right? We still had some hot data, some overall data that suggests, the labor market is cooling, and so the Fed may be in a position to start to cut interest rates. The Fed, by their own description, has actually called their stance currently a little bit restrictive. And so with the Jackson Hole Symposium coming up, it is pretty expected actually that Powell is going to make mention that a September cut seems appropriate. But the bigger debate, and I think what becomes more interesting in coming months and weeks, is whether or not this will be a hawkish cut, meaning they cut interest rates with the expectation that it's not going to be a lot, that they're just bringing down what they believe to be restrictive, they're taking it down a little bit, or whether or not it will actually be a dovish cut, which they cut with the probabilities of further rate cuts this year. We've seen we actually saw from Fed Goolsby this morning that if inflation continues to not spike too much, that they may actually be willing to continue to cut interest rates this year. And I think that that's kind of the posture. I actually had an interesting conversation with someone earlier yesterday, actually, about this concept of, at the beginning of the year, the question came, it was, can the Fed go back to being sort of in a stance of wait and see. And I said at the beginning of this year, basically, we had a situation in which the Fed could be on wait and see because labor data had not shown signs of really materially weakening. Now we are starting to see, we had a really poor NFP report. Unemployment rate has slowly trickled higher. It's not a dramatic one, but it's still at a point where, why risk it? The Fed sees themselves as restrictive at this point. So it's still expected that we're going to get cuts. It's just a question of how much are we going to get cut? Are we going to get considerable rate cuts in the coming year, or are we just going to get a little bit? And that's where things kind of jostle back and forth. And I think the dollar is largely telling you that it thinks we're going to get rate cuts. We may not get dramatic rate cuts, otherwise we would see a much lower dollar, but we do see rate cuts still on the horizon.
I hope that video was helpful to you, and I also wanted to make sure to share our Telegram channel with you. Every day we are posting up chart markups and analysis and in-depth breakdowns of what's going on both fundamentally and technically in the markets. We also drop bonus videos in the Telegram channel, so don't miss out. Come join our Telegram channel. The link is in the description down below. Have a great rest of your day.